Now, the genesis of Cerillion is one of hard work and opportunity. It was established in 1999 following a management buyout from Logica. It listed on AIM in March 2016, and in June 2023, it was nominated for 4 small cap awards, and the chief executive, Louis Hall, was awarded Executive Director of the Year. So, Louis Hall, you are the chief executive. The award is for an individual who delivers strong growth trends over time. Before we delve into that, what is it that Cerillion does or delivers?
Good question. And sometimes that can be a little hard to explain. But essentially, we're in the B2B space. So we provide enterprise software to telecoms businesses of all different kinds, all over the world. And essentially, this is a software that sits between telecoms companies, network infrastructure, and their customers. So it enables telecoms businesses to define the products they're going to sell to their customers. So increasingly in developed markets, telecoms companies are offering what we call quad play. So that's a mixture of fixed wire, mobile, broadband, and then TV packages. So if you think in the UK, for example, of Virgin Media and BT, those kind of deals. And those are really complicated things to define and to create. And the way that telecom businesses bundle those services is how to differentiate between each other in what are very competitive markets in most countries. Once the telcos have defined the products they're going to sell, we provide a software that enables them to onboard their customers through CRM channels, call centers, through customer self-service, so customers going online and serving themselves through mobile apps, dealer portals, and so on. And then once customers have been onboarded, we provide software that turns those services on the network. So that's all automatic connections to telecoms infrastructure, whether it's mobile, fixed, TV, whatever. And then once those customers are connected, we monitor their usage. So we regulate their usage, we manage balances, top-ups, charging for overage. And then we have a set of modules that then handle billing, accounts receivable, collections, payments, and so on, and a lot of other ancillary stuff that sits around the edges of that domain. And that's a very clearly marked out space in the telecoms world. You know, we're one of the main players in that area. It's absolutely a critical software. Telcos can't be in business without that software. And one of the great advantages of telecoms is that it's a global, truly global industry, and the standards that are used in the UK are the same that are used in US or Australia or South America, Asia, and so on. So we're in a very good place in terms of market domain.
So it sounds as though you solve a lot of problems for your customers. I'm sure that they absolutely love you. And you said that they can't do without you. So do you have all the big telecommunications players as part of your, not your portfolio, but your customer base?
We certainly have a lot of the big ones. We tend to, it's a little bit of detail, but I guess what we're offering to the market in terms of differentiation is a software as a service solution. And that's a very strong trend in software in general, has been for the last 5 years or so. But it's been very slow to hit the telecoms enterprise software space. So traditionally, telecoms businesses will have very heavily tailored solutions built for them, which generally start from some kind of product framework provided by a vendor, but then have a lot of tailoring around the edges. And that means projects that, you know, these are implementations that can cost hundreds and hundreds of millions of dollars. And, you know, everyone's different. They take 3 to 5 years to complete. Often they don't succeed because they're just too complicated. So we're saying you don't need this approach. Telcos can use standard software for this, and it all works out the box first time. But it tends to have been the more kind of mid-sized telcos who've gone with this approach to start with, and it's gradually creeping up into the larger telcos. So with the larger telcos, I think there's a lot more traction for us going forward than there's been in the past. And to give you a bit more detail, we typically, with the larger telcos, we work within niches. So we work with either a single one of their brands, rather than all the brands in the group, or we provide a subset of our modules. So we don't provide a whole suite. We maybe provide 1 or 2 modules of that suite to hit a specialist niche. Whereas for the mid-sized telcos, we tend to provide absolutely all of our software across all of that telco's brands.
And the customers that you have at the moment, are they loyal to you?
Yeah, I mean, they're very sticky relationships. So it will take, we're pretty much the fastest time to market of all of the vendor groups. And, it will still take 12, 18 months to implement our solution. But the market norm is more like 3 years or even longer in some cases. So that's a very long process, and it's a long selection process. It's a lot of detail, a lot of complicated interfaces with telecoms network infrastructure and so on. So it's a big job, and once you have a customer, it is quite hard to lose them. So as long as we keep doing the right things, and also we keep evolving our solutions. So we invest thousands of man days of effort a year in R&D to keep bringing our customers up the latest features that they need to compete in their markets, and to adapt to new technology like 5G, for example. And that is a key part as well. So that because we're taking the software as a service approach, and we're encouraging customers to go onto our evergreen program, it means that they're automatically going to be updated twice a year anyway. So this is in a market where often telcos will run the same software for 5 or even 10 years sometimes, and then you do a big upgrade every 5 or 10 years. So it's a very different kind of approach.
So I was just wondering how flexible and adaptable and fluid you are, particularly with what's going on in the macroeconomic world. We've got high inflation here in the UK, interest rates on the rise. So is your company, is the sector immune to those economic headwinds? That's
a good question. I mean, I think the UK is suffering more than a lot of the world, certainly more than the US and so on. But anyway, but in general, we are in an inflationary environment, and I think that telco has always had very long investment cycles. So if you think about investment in 5G, we've been talking about 5G for 5 years or more, only really now just getting into the real meat of the investment cycle, and that will carry on for probably another 5 years at least. And if you then think about things like digital customer experience, another big theme in telco, again, that's a very long investment cycle. And I think those cycles have always been long and relatively insulated from the macro environment. But also telcos are really a bit like utilities. They're providing services that their customers aren't going to do without, or at least they'll be one of the last things they'll do without. So the ability to watch TV, to have internet access in developed markets, to make mobile phone calls. That's one of the last things consumers will give up, and one of the last things businesses will give up, because they can't be there without those services. So I think telcos themselves have a lot of pricing power, and we've seen telcos increase their pricing quite significantly in most developed markets, which is where we're mainly based. So I think we're relatively, telco is relatively, I wouldn't say immune, but the impact's somewhat softened.
So you've told me that your customer base is sticky. There's not much churn, if at all. I'm just looking at your shareholder register, and it looks as though your shareholder register is pretty sticky as well. Once there, do your shareholders tend to be of the long hold variety?
Yes, I think so. I mean, most of our investors are investing for a long-term return as a growth stock. And I think they tend to take the long view. I think with some of the quite steep rise in growth in share price we've seen in the last few years, especially the last couple of years, we have seen some profit taking, and I think that's inevitable. And it's just the way the market works. But in general, our shareholder base is pretty long term, yeah.
So you own 30.45%. So obviously a lot of not just self-belief in the business, but what about those who surround you? How would you describe the board, the character of the board?
I think the board is fairly high level, more of an oversight body. So the sort of day-to-day running of the business happens in the executive management team, and those are mostly people who have been involved in this for a long time, and are used to all of the twists and turns of this business. It's not an easy business. We're delivering complicated software projects to demanding customers, in Europe, Asia, Americas, all over the place, and that does come with challenges. We're operating out of UK, India, Bulgaria mainly, but we have presence in Australia, US, Singapore, and so on. So for a small company of 350 or so people, that's quite a lot of things to juggle and manage. So I do rely on having a team that's been very experienced and been doing this for quite a long time. But as we grow, we expect to evolve that team and bring in new faces and different kinds of experience as well.
So therefore, how do you intend to grow? There's been a lot of M&A activity, or at least attempts of M&A in the telecoms sector. Is that how you intend to grow?
Yeah, we're constantly looking at M&A opportunities, and I think we're quite conservative in that we're not looking to buy another company doing the same thing, or a bigger company doing the same thing, or whatever, or just to add bodies or sort of those sorts of things. What we're looking to do is to find businesses that have software products that fits around the edges of our portfolio, rather than overlapping pieces of our portfolio, and that such that we can sell that new product into our existing customer base, and also sell our existing products into the new customer base that will come with that new product. So quite sort of conservative tuck-in, bolt-in type transactions. I have to say, because we're fortunate to have high margins and have managed to grow those margins to into the 40 to 45% range at EBITDA level, it is hard to find businesses in tech that are in telco that are trading at that level. So we're a little bit, it does make it harder for us to find things that are the right fit. Obviously, we're conscious that if we do deals that are of any significance that have with business with much lower margins, then we're going to dilute our own margin and so on. So there's a constant trade-off going on, I guess.
Okay, so M&A aside, what were you most proud of in your most recent results?
I think the orders progress, and the fact that we built a lot of business with the growing customer base. And one of the things that we work very hard at is bringing on board more of these larger customers and doing some larger all-inclusive deals. And we've gone from a business that 10 years ago was selling perpetual software licenses and 20% maintenance support to a software as a service business that's selling quite large typically 5-year software as a service deals that encompass license support, hosting the solution, managing the solution. And that's a much bigger, stickier, long-term, recurring revenue scenario than what we were doing in the past. So I think that's what that growth in recurring revenue from existing customer base is the thing that I think has been most important for us in the last period.
So Louis, let's end where I started. That award, you won it for being the individual, and I know that you've said it's a team effort, for being the individual who delivers strong growth trends over time. How do you intend, and the board intend, to deliver those strong growth trends?
I think we have to keep doing a lot of the same things. So we have to keep working at climbing up the value chain ladder and continuing to win deals with bigger customers, bigger deals. And we have to focus very hard also on building our team, particularly building out our new center in Bulgaria, which we opened about 18 months ago. We need to grow that quite significantly, I think, and keep delivering. I always say that you're only as good as your last customer implementation. We have to keep making a success of our deliveries, and our customers at the end of the day are our best salespeople. So we've got to keep those customers happy.
Louis Hall, Executive Director of the Year and Chief Executive of Cerillion. Thank you very much indeed.
Thank you very much, Sarah. Thank you.